Okay, happy Friday, everybody. I've got a lot of information I'm going to be sharing today. I'm going to be sharing a ton of information. This might be a little bit longer than normal. We're going to be talking about interest rates. We're going to be talking about appreciation. We're going to be talking about market softening. We're going to be talking about a real historical look on where we are versus where we were a couple of years ago. That way you can compare. And I think my goal here is for everybody to be able to make wise decisions on buying, selling, and also to just have great information. So that's really my goal for today. We're even going to talk about Bitcoin and we're going to talk about cryptocurrency on today's episode. So obviously, I'm running this live. So if anybody ever wonders, it's live. You could also obviously text me here at this number that you're seeing on the screen. And if you would like to subscribe, that'd be fabulous. And so we're going to talk about a lot of things. And if you have some questions, go ahead and leave it in the chat feature. You can leave some comments there. It'd be great. So the first thing we're going to do is we are going to look at some things, really, really interesting slides that I found that I think will be very, very helpful for everybody. And I think what we're going to look at, first thing we're going to look at this one here that's going to talk about, we're going to cover interest rates, mortgage rates, and the impact, where are things going to go? There's a lot of rumors, a lot of ideas about where interest rates are going to go. And I think it's really crucial that we take a look at these things because they really impact where the market is going to go. So this particular one here, the single biggest risk to housing, rising mortgage rates, is a real possibility in the next year. And that could bring prices down further. Other economic, financial, and confidence challenges could also result in a drop or flattening of home prices, even with solid buyers in place. But a drop or a flattening in home prices is a far cry from the crash we saw during the Great Recession in '08, as Ali Wolf, chief economist at Zonda. So that's definitely something to take a look at. When we're looking at this, I think obviously it's not a market crash. We're seeing some corrections all of a sudden, especially not necessarily in pricing. Pricing seems to still be going up, or at the very least, I've had a couple of conversations with some of my fabulous agents that the market has plateaued a little bit. I think we saw big jumps in prices the first part of this year. Now it's kind of more of a flattening, not a decrease, and certainly not another increase, but definitely a flattening. Um, and at the same time, we're also seeing not as much inventory coming on the market right now. I believe we're at like 78 properties that are active. So we haven't crossed through the threshold of 85, I think was our high over the last several months. And when we hit that recently, we came down again. So we're not breaking through that ceiling of inventory. So inventory is still staying low. So this is an interesting thing. We're also seeing some other people talk about, we're seeing some other people talk about, where interest rates are going up, but also the level of sales that look like it's also going to come down a little bit. And this is, I should share a screen with you from Ivy Zellman, who's basically saying that closings are set to decline. And keep in mind, I'm starting with the macro. I'm starting with the larger level stuff, from a macro level, nationally, as opposed to, looking at the local. We're going to look at the local in a minute. So closings are set to decline roughly 10% year over year in the second half of 2021, and home price appreciation is on the cusp of flipping to a decelerating trend. Now, Ivy Zellman, it's interesting because she has a little bit of she's very well respected economist and very, very strong in her opinions. And if you ever watch her on YouTube, she's very, very intelligent and very thoughtful about what she's looking at. And a lot of times she's right on the money. There are some differing thoughts on this where we're seeing some thoughts. Some people are saying, you know what? Interest rates are going to be, they're not going to go up that high because the amount of debt that we've got on the table as a country. So we're going to keep the interest rates low. But recently the Fed met in Wyoming in Jackson Hole, and there some of the top people in banking met as well. And it looks like they're talking about some interest rate increases without actually saying that. It looks like that's what's going to happen. Maybe going from, most of the top folks, whether it's Fannie Mae, Freddie Mac, they're saying, we'll probably go from the, all the way up to mid threes, maybe upper threes in interest rate. So if that happens, I can see where Ivy would be accurate, and I can see where closings would decline a little bit. But we're going to look at that in a minute. Like, we're going to take a look at, like, remember that closings were all the way up here this year. So if we did see a decline, it wouldn't be terribly surprising. So I don't think this means market crash. It just means, what, there's going to be some softening, a little bit of pullback, and especially if interest rates do go up. But I think it's important to share this information. By the way, this isn't negative information. This might be maybe a little bit better for some buyers that can jump in the market. Maybe the inventory will pick up. So we'll see. We'll see about that. We'll pay close attention to that for sure. Okay, so that's that. The next thing I want to share with you is I want to talk to you about growth, market growth. And I think that's something that people are asking. Get a lot of that type of question now with a lot of people. Whether some of my agents are asking that, but also some of my customers that are some people are actually on this channel that are asking this. What's going to happen next? So this right here from Bill McBride, Calculated Risk. My sense is the Case-Shiller national annual growth rate of 19.7% is probably close to a peak, right? Talking about national annual growth rate, and that year-over-year price increases will slow later on this year. So I think that's pretty much what we've seen, right? A little bit of a slowdown. I can tell you locally here that we are seeing things move a little bit slower, being on the market maybe longer than 3 minutes, and now it's 3 weeks. So that's not necessarily a bad thing, but it is a jarring effect when you see that. It's a shock. It's a big difference than what we saw back in June and July, but still certainly not a 3-month or a 6-month wait, which we've seen in the past in many markets around the country. But specifically, we've seen some of that in the villages from years back, maybe 8 to 10 years ago, where it took much longer to sell a home. Okay, so that's one thing to look at. The next thing I want to show you is we're going to look at house appreciation. Once again, we're going to be looking at annual numbers, and the annual numbers show this, right? We're looking at July 2021 year-over-year house appreciation. And what we're seeing here is we're seeing 19.2% the Federal Housing Finance Agency House Price Index, right? Increase there. CoreLogic says 18%. S&P Case-Shiller U.S. National Home Price Index 19.7%. So nationally 18 to 19.7, almost 20% year-over-year house appreciation. And now this is national. So we're going to take a look at some numbers in a minute for the villages and more local numbers, but I'm giving you a little bit of information here so you can really see what's going on, because we are impacted. Our local market is definitely impacted by what happens nationally as well. So I'm going to let's break it down by state. So by state, this is what we're looking at. Okay, price appreciation by state. What you're seeing here is anything in red. These states just went right through the roof on price appreciation. West Coast, tremendous price appreciation, and also keep in mind that we're getting a lot more people move from the West Coast to our area for various reasons. And 37% in Idaho, like, wow, that's like maybe one of the biggest. 20% in California, 23% in Montana, Arizona, almost 24%. Some of the parts of the extreme Northeast as well, like super high appreciation. And then, of course, us in Florida, we are 18.9%. But once again, we're going to look at more specific numbers. for the villages in a minute. Okay, hopefully this is good information for you. I think a little bit of background, I think, is definitely helpful. Okay, when we're looking at appreciation, it does make a difference, to a lot of people. Now, it's interesting because a lot of people think, well, appreciation is good. Well, it's good for the sellers, and buyers think it's bad. So it depends on what side of the fence you're on, right? Like, it's so interesting. And so I think really ultimately there is no good or bad. It's just good for some and maybe bad for others. It's kind of an equal opportunity thing. But also we're seeing a little bit of slowdown. And I want to show you a graph that really depicts a little bit of an understanding on the slowdown. And if we take a look at it, we'll look at this, why it seems things are slowing down. We'll look at, this year versus last year. And this is, national volume sales. This green here is actually our, this year's numbers, right? So we saw from the beginning of the year back in January, like January of 2021, this green here, right? And now we've seen a little bit of a slowdown all the way into July. This is actually only going to July, and then it has picked up a little bit more. And now let's look at 2020. This kind of tells you what was going on in 2020. And now it seems like, 2020, the latter part of 2020 was really, that's where things really, this is national numbers. This is where things really picked up. And, comparatively speaking, nationally, traffic was much higher than what it is now. But so let's take a look at what happens. This is all national numbers. Obviously, there's impact because we've got feeder markets. Most of our people are typically have come from either south. We've gotten a lot of people from South Florida, but northeast, Midwest, east of the Mississippi, typically have come here. But now this last year or two, we've seen more and more people come from the West Coast. So we're seeing more and more people come from the West Coast. So let's dive deeper into the local villages market. And while I do that, I want to share something really interesting, a little bit of a sidebar about, and you might be shocked when I say this, is cryptocurrency and Bitcoin, because we rarely talk about Bitcoin and cryptocurrency on this particular channel because it's a local channel talking about villages and real estate market. But recently I had a conversation with a title company closer, and she got trained to accept Bitcoin as a form of currency to be able to buy a home. So for those of you that have Bitcoin that want to buy a home, it's doable, believe it or not. So some of you might be thinking, oh, Bitcoin is this some fantasy thing and it's gambling, and yes, it's volatile and all that kind of thing. And I'm not going to talk about investing in cryptocurrency on this channel necessarily, but I will tell you, look, if you have thought about buying it, or if you've thought, what, I don't think that's ever going to come into real estate, guess what? You can buy real estate in Florida, in the villages, in surrounding areas with Bitcoin, and gets, obviously the buyer comes to the table with Bitcoin. You don't have to accept Bitcoin. You would actually get the equivalent in cash, US dollars. So just FYI, that is an accepted form of payment. So it's really interesting that things are moving in that direction with cryptocurrency and Bitcoin, and who knows, what other cryptocurrencies will be next. So fascinating. So if you're not familiar with all of that, it's a good thing to actually watch on YouTube and get informed about what's going on there. But let's take a look at, let me do another share screen. We're going to look at the numbers. Let's take a look at specific numbers on what is happening in the villages. And I'm looking for, I think this will give us I think this is it. Okay, good. So what I want to share with you here is we're looking at a historic year by year, on units, on the number of units that are being sold. Let me try to bring this, hopefully that's a little bit better. I'm not sure if this is better, but I'll read it to you anyway. This is basically, I know it's in small print here. But this is what we're looking at here. This is a historic sales year by year comparison. Villages is what we're looking at. We're looking at only the villages here in MLS. And these are number of units. So let's start with where we are now. So if we look at October of this year, and obviously we're not finished yet. Most of the closings will probably today, we're in the 29th, the 1st is November, 1st of November is Monday. So we still have today's numbers, which are not included here. And that could be really significant because usually the last day of the month has the most number of closings. So that could be a big difference maker here. So this is not totally complete, but giving you an idea, 138 closings in the villages on MLS this year. Compare that to a 2020. Remember what we just looked at. So we just saw, right? We saw that the number of sales were picking up towards the end of last year. That pretty much is the case, 144. But we saw a dip there. So if you look at what's happened, let's take a look at January of 2021, like 152, 176, 265. March, absolutely record setting, doubled. If we look at the numbers from 2018, actually a doubling from 3 years ago. In March, a doubling, more than a double, on the number of closings. 268, 242 in May of 2021, 282 in June. The record that was actually the peak, which, by the way, we've talked about this in the past, where we've seen June or July be a very strong month, typically in the villages, which might be a little bit surprising to people. But if you look at that, yeah, June and July are typically really strong months in June and July, and each year for the villages. Look at that, 242 in May, 282 in June, then a little bit of tapering off, 224, and then now look at it, much more softening in the marketplace, like the number of sales. 165, 165, 138. This is probably going to be close to 165, or maybe a little bit more, is what I anticipate if we look at these numbers next week. So that tells you the trend of what this really looks like. And in fact, what I really want to do is I want to show you something that might be also helpful. I think you guys would appreciate this too, which is, let's look at a chart. And that's kind of a crazy chart. But let me try to streamline this for you. 2021 is obviously this is way up here. Like these are the numbers. This is how much of a difference this is versus the last 5 years. This was this year. That tells you exactly what we were dealing with. And now, guess what? We've fallen into more of a normal marketplace. Look at this. Look at this here. Look, big differences here to here, right? Big differences this year. But now the 5 years, kind of, there's this, there's a level where it's, the village's sales has been playing in this parameter here between, and this is actually number of listings sold. You're looking at pretty much, there were some lows here, and that's coming from 2016. But as the years progressed, we saw increases. But this has been pretty much where sales have stayed right here. And now this year, starting with, pretty looks like end of July, that's basically where we are. We're back into those parameters, more of a normal marketplace. So that's definitely an indicator there. Wanted to look at sales volume. So this is going to tell us a little bit more about, average sales price of, obviously have jumped up, and the same thing. This is a sales volume, but I want to look at the data. I want you guys to look at the data here. So let me blow this up. Sorry, we can't make this a little bit bigger. But when we're looking at sales, let's look at the sales volume in the villages MLS in villages Florida here. We're looking at, let's go back a few years. We go to 2018, where January of 2018, we're talking about $29 million of sales. And now January of 2021 went to 48. And then if you look at February of this year, 53, big jump in March, 85 million, April, 86, almost 87 million, May, a little bit of a softness, June, $92 million in sales. That, now look, you're talking about almost a tripling over last year. Now, last year was odd because we were just coming over, getting out of the lockdown, right? Like that's really what we saw. So you can't even compare. Looking at 28, looking at low numbers. April, May of last year. But even this is a fascinating thing. Look, April and May of last year, coming out of the lockdown, that still beat April, May of 2016 volume wise. Just to tell you what has happened with number of units sold, tells you the growth in our marketplace, how many more properties there are, how many homes there are, but also tells you the average sales price has increased dramatically in our area over, from 2016 to 2020. you know, we had a lot more units sell in 2016 in May and June versus 2020 because we were actually in a lockdown. I can tell you it's really sparse. Um, but the volume, meaning average sales price, much higher in 2020 versus 2016, and then even more so in 2021 when you're looking at this number and then the units that we're selling. So big spike up. I mean, look at, if we take the high month of June for this year, 92 million, we're looking at 36 million in May, or I'm sorry, last year, 2020, June, 2019 in June, 44 million, 34 million in 2018, 40 million in 2017, 28 million in 2016. So we're talking the closest month in any of these years was obviously June of 2019 was one of those highs. I think the next closest might have been like 54 million. Looks like March of 2020, just before the pandemic hit. But still, 54 million compared to 92 million June of this year. That is the reason. That is I wouldn't say the reason, but that is an effect of the price appreciation that we saw in this particular market, almost a doubling from one high to the next high, which is absolutely unbelievable. And in many cases, if you were to look at, May of 2016, just for fun, and then a 5-year difference to June of this year, you're talking about a 4x event going from 23 million to 92 million. It's like unbelievable what's happened. So that gives you a little bit of insight. I don't think I've shared some of these numbers in the past, but this really tells you exactly what we've seen in volume. It tells you the number of units that we've seen sell over the course of time. I can tell you that when we're looking at, as the broker owner here at Realty Executives, I can tell you that I work with a lot of wonderful agents here, and I can help you with that in buying and selling here. So if you need some advice on that, you can text me here at this number. But based on what I'm hearing, had lunch with one of our fabulous agents, fabulous realtors here, and we're talking about appreciation this year, and I'm noticing what I think what we're seeing is probably what Ivy Zellman, and I shared that slide earlier, is indicating, which is a softer market, and maybe a little bit softer than we thought, but definitely not a crash, but certainly a softening in the marketplace. She's predicting at least a 10% decrease in number of sales. When we look at previous months, if we look at the one thing I did want to compare is the volume. If we look at volume, actually, let me go back. I want to look at units for a second. Number of units, because I think that's super crucial when we're comparing number of units. I'm looking at number of units this month, 2021, versus prior. We're actually in line with prior years. So if we're looking at, let me do another share screen with you because I want you to see this. Because one thing I feel really good about is I like having everybody look at the numbers with me. So it's not me just making up numbers just to be kind of a Pollyannish type of person. I want you to really look at what I'm seeing. So you can really get firsthand, because most agents, most realtors, most brokers won't be sharing this with you. They should. And I would actually encourage, whenever you are interviewing, it doesn't matter where you're from. Many people are watching this or out of state. It doesn't matter where you are, whether inside of Florida, inside here in the villages, or whether it's Sumter County, Lake County, Marion County, or anywhere else in the country. Make sure your realtors know this. They understand the marketplace inside and out. I think it's really important. But look at the units sold so far in October. This year is 138. And today, like I said before, is a big number for closings. This is going to go over, I would anticipate over, obviously, 150, 160. I think it's going to be in line, 165. But if you look at the units, let's forget about 2020. I've been really, 2020 was, and this year, by the way, I think are outlier years for same reason, but differing effects. Let's look at 2019, 18, and 17 for number of units sold in the villages, more in line with 18 and 19, and definitely more than 17. So I think that's what we're going to see next year. If you're, let's look into the future. I think we're going to see more of these units, as far as getting sold, maybe a little bit more. We're seeing 165, 138. This being October being more one of the slower months in our year, but still, I think that's probably what we're going to see more of. And I think when we start looking at the volume number is going to be bigger than these years, because average sales price is much higher, significantly higher now than what it was 3 to 4 years ago. So when you're going to be looking at volume is going to be larger next year, probably versus 2018, 2019, probably not going to be as high as what we're seeing here. I'd be really shocked. And obviously it's going to look better than 2020, but certainly in these parameters. So I think we're going to see more of a normal market moving forward. I guess that's what I'm telling you. Ultimately, that's what I think that's what everybody's really saying, and without saying it, but I'm saying it here. Maybe I'm the first person to say we're going to see more of a normal market next year in 2022. So if you have questions, let me know. Come visit us at buysellthevillages.com. That's our website. And of course, text me if you have any questions, or call me. Either one is perfectly okay. And hopefully we covered everything. I think we covered everything today. We covered Bitcoin even, and cryptocurrencies, and we covered price appreciation and interest rates and growth and units and volume and lots of other stuff. So hope everybody has a great weekend, and we will connect soon. Take care.